Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. And if you're new, welcome to the Daily Gold YouTube channel. Thank you so much for tuning in. This video is being recorded on the afternoon of Friday, March 14th, 2025. And as always, I'm here to wrap up the week. And what can I say? What an incredible, significant week in the precious metals world, even dating back to the end of last week. It's been an incredible 6 or 7 days in precious metals. Some very, very significant developments taking place in this market. Gold closed the week at 3,001. Silver closed the week at a 12.5-year weekly high, highest close in 12.5 years, highest weekly close, that is. GDX closed at a 13-year high. Oh, and also gold against the 60/40 portfolio closed at a 10-year high. It has broken out. People, it is party time in precious metals. What a week. This is going to set the stage for some incredible moves over the coming years. And from a 50,000-foot view for precious metals, it doesn't get any better than this. What a bullish signal breaking out against the stock market in the 60/40 portfolio. Finally, something I've been talking about for years and years. It's finally here. Enjoy it. And I hope you enjoy the rest of this video where I will go over the charts. So starting off here, I believe this is monthly data. This is gold, the gold bar chart. This is gold against the 60/40 portfolio here. And this is gold against the stock market. And so this was the big development here and here. So we have gold breaking out against the S&P 500 here. Gold breaking out against the 60/40 portfolio here. Now, this is monthly data, so these levels are if the month closed right now, but we've already broken out in these two charts on a daily and weekly basis. I will show you a weekly chart a little bit later. So that is significant. So I don't expect a huge reversal or snapback in these ratios into the end of the month. So I think on a monthly basis, you'll see these breakouts hold. And just a bit of a history lesson here. Okay, what happened the last time you have a significant breakout in these charts? Well, you can look here, early 2000s, where the trend was down. Here's the 40-month moving average. Bottoming pattern here, breaks above it. Gold, that's the beginning of a secular bull. Same thing for gold against the stock market. Then you have here, gold against the 60/40. The real move was here. Again, it gained the moving average, 40-month moving average. Breaks out here against the stock market. So we know that this is a really bullish signal for the coming year, not just 2 or 3 or 4 years. This is for like 10 years, people. So that's what you see. Moving on, I got a lot of charts, so I want to be quick. So here are the same charts without gold. So this is gold against a 60/40 fund. This is a BlackRock fund, and this tracks my 60/40 data very, very closely. So this is a good substitute. Like if you're looking on a daily basis or a weekly, you can use this fund here. And so this is gold against the S&P 500. So this is weekly data. And here we can see gold against the 60/40, that fund. And look what happened a couple weeks ago. Breakout, retest, boom. Look at that. This is a clear breakout. So yeah, it could pull back a bit to the end of the month or at any time, but this breakout is firm. Gold against the stock market. Here we see it here. Breakout, beautiful. New 4-year high. Love it. Perfect. Now let's take a look at the inverse look. So we're looking at the 60/40 portfolio and the stock market divided by gold. And so we can see here, because it's always good to look at things inverted, I think. Who's Warren Buffett's? I'm sorry, I forget his name. Charlie, gosh, I forget his name. But he said, look at things in an inverted way. So it's always good to do that. So inverted look here. So this is the 60/40 divided by gold. This is the stock market, the S&P divided by gold. This is an 80-month moving average. So let me start here with the stock market. So you have this breakdown here. This is, I can only show one moving average here, but this is the 80-month. It's the 40 and the 40-month is also right here. You can't see it. You'll just have to trust me on that. But it's clearly broken below the 80-month, and so that's significant. It broke below the 80-month here. It already topped and fallen. In here, I mean, it lost the 80-month here, the end of 71 into 72, then it plunged. So I did mention in a few tweets, this is also I think this is more similar to the gold stocks in 1965 than this break here in 1971. So maybe the stock market can make a false new high or a higher high. Maybe not, but who knows? Maybe in 3 or 4 years it could do that, but it wouldn't be significant. It would be like the 1968 high after the 66 peak, something like that. So this is, look, in real terms, the stock market is finished. The bull market's over. So this is just really bearish for the stock market, really bullish for gold, obviously. Here's the inverted look, 60-40 divided by gold. Look at this huge breakdown. I mean, this is ugly. Here, it lost the 40-month moving average, failed here, another test failed. Then it's pulling away to the downside, hanging on. Okay, now it's breaking down. So this is ugly. And something to keep in mind, these breaks, like after this break in a year, I believe this was like close to a 30% decline in a year. And this was like close to a 50% decline in a year. So this is setting up for the stock market. Maybe it declined. I don't know. Like it could go down another 20% and gold could go up, what? Another 10, 15%, something like that. So this is setting up to get potentially plunge. I mean, because that's what happened the last time in here. It also happened in the 1930s, by the way. But that would be overkill showing that. Okay, next chart. So now we're getting into our normal charts. Here's the daily candle chart. Gold here, silver here. Gold, of course, 3,000. So there's also from this triangle breakout, this projects to 30.50. So we could see 30.50 on this move. Yes, gold is getting extended. Just gold in a vacuum. It's pretty extended. And I'd have to look at some Fibonacci levels, potentially some other things. But the best thing about gold right now is silver's catching on, and the gold stocks and silver stocks are really starting to catch on. So that's the best thing about gold. But on a daily basis, silver is more interesting to me. Last thing, okay, this is the support right here, right? 2,900. So this is support. Big candle there, bounce here. It held here. So that's support. I mean, you could get, what is this, 2,950, 2,950 to 2,970. That's a potential area into next week. But the silver daily chart is just more interesting. Finally, it pushed above this 32.33 area. Doji candle today closed at 34.42. It was at 34.43. Yeah, so we can see here, look, 35 is stiff resistance. I mentioned it before, 35 on a monthly and quarterly basis is very stiff resistance, but that's monthly and quarterly. So on a daily and weekly basis, maybe silver or I could say a daily or weekly basis, maybe just a daily basis, you could see this move continue to 37. So 35's resistance, also resistance at 37 and a bit at 38 as well. Now, this is significant. This is the gold-silver ratio. So this is 90. 90 was support. It's been in a 2-year range, and it broke out here, and I may have mentioned, that, I think I did mention breakout. It's at 92. Maybe this could go to 100, but it's come back down. It's a false breakout. So you have this trend line here, and it's broken down in favor of silver. So this is interesting. Maybe we will continue to see silver outperform, especially as gold is pretty damn overbought here, and it's hard to think gold in the short term is going to go to 3,300, 3,400, something like that. Whereas with silver, we could see that going to 37 or 38. So short term, it looks good that silver is going to outperform gold. And this is just a long-term weekly chart. And so here's the cup, the handle. By the way, I tweeted this, and I'll hopefully do a video on this next week or so. If you look at cup and handle patterns, historic ones that are similar to gold, you'll find that the measured upside target, after that is achieved, then it takes 6 to 12 months for that market to get to the log target, which is like the percentage target, basically. The log target would be, okay, we're taking this just for, let's just say this is 100%, then we'd measure up, and that would give us 4,000, 4,200. Looking at this, I mean, you can measure it in a couple different ways. It depending on what points you use, the log target comes out to 3,800 or 4,300, something like that. I think 4,000 is the best target. So potentially based on that history, I mean, this is not necessarily the strongest history, but it is some history and precedence. And so based on that, that would tell us gold could reach 4,000 in 6 to 12 months. I mean, we'll see. There's probably a 15% correction in gold in there somewhere, maybe 13%, 12%, something like that. You'll have to see something like that on the way to 3,000. Looking at the silver weekly long term, I mean, this has just been stair stepping. I mean, it's been slow but steady. We can see here, steady around here, held above 22 support, shot up here. I mean, we can see these tops here were at 29, 28. That was an initial peak here, support here, went below it. Now it's back above. Okay, tested it, held it a couple times. Now we're pushing higher, back up. We get basically at 35 here, and a weekly close above 35, that should get you to 37 or 38. So this also solidifies 29. This move here, that solidifies 29.30 as strong support for silver. And it's still probably going to stair step, but you need to see silver once it breaks above 37.38. That's when I think you'll see momentum really pick up, and it could really outperform gold strongly. So let's get into these stocks which have been crushing it in recent days and weeks. We have GDX here, XAU, GOEX, which to me is a better junior index than GDXJ, because GDXJ, the top 10 companies are just huge. They're mid-tiers, they're not juniors. And so we can see, these three indexes are coming up on 4.5-year base resistance. This is broken out today. XAU, I haven't checked, but it's not above here, but it's getting very close. GOEX is also getting very close. I didn't check. So here's GDXJ. This is a 4-year base. So the gold stocks are set up for some really significant breakouts. I talked about it quite a bit in recent articles and videos. And look, you want to get positioned, and at this point, just wait for the breakout. You don't want to try and trade in or trade out. You're going to miss it. So whether this starts to pull away in the next week, the next month, or the next couple days, the odds of it happening are very likely. And so just get your positions and hold, and that's the best strategy, because a big move is ahead. And with that, look, if you're not a subscriber and you own mining stocks and juniors, would love to have you at the Daily Gold in our premium service. Go to thedailygold.com/premium. You can learn about our service. We put out a big update every weekend, including flash updates. We're going to be looking to do more flash updates over the coming weeks and months. And in our updates, we put out company tables where you can learn information about a company quickly, as well as other companies. We have a top 10 company list, a watch list. We have these company tables. We're working on a bit of a silver table. We started it last week. And so these company tables can allow you to understand and digest a significant amount of information, or the most important information, on quite a few companies very quickly. So you can download our updates, look at these tables, and get informed in a few hours on all of our favorite companies and all those things. And just would love to have you aboard if you're not a subscriber. If you are a subscriber, thank you so much. Really appreciate you and your business. And so let's wrap it up here and talk about breadth indicators. So for GDX, we don't have all of the breadth indicators I'm tracking. My data is not updated yet, but we do have from GDX new highs and new lows. Also, these two indicators, these are breadth indicators. So I'll start with these two. They're not necessarily my best indicators, but they're still good. I mean, generally you can see, look, these tend to blow out at 100 when you have a significant top in the market. So look where we are now. There is still room for these to move up. Now, I like new highs. I think this is one of the best indicators, new highs divided by new lows. I smooth it with a 20-day exponential moving average. And so we can see here, I mean, the three big peaks in the last 10 years, COVID 2020, 2016. I wouldn't say this was the biggest peak in 2019, but it's third after these two. But nevertheless, we can see, I mean, the peaks as far as the 20-day exponential moving average, I think it was around 30 to 35%. Where's the 20-day EMA right now? It's at 13. So it's at 13% right now. This is where you see significant peaks. But people, we were not in a secular bull during these peaks. So the next major peak that we have in miners, the breadth indicators may really blow out to the upside. They may be a lot bigger than what we're seeing here. But nevertheless, when this baby gets up to these levels, that's definitely going to tell us things are really, really extended. If you look at certain stocks, maybe we'll take some profits. You look at the sector as a whole, maybe we'll take more profits. But it's just important to understand these indicators because they can tell you when to take profits and when the risk is higher in the market. Right now, yes, we moved up a lot, but we're breaking out of huge bases. And if we look at these indicators, the risk, maybe for the next couple of days or next week, yeah, there's always risk of a pullback. But big picture, we're not coming into a significant top. Like there could be a lot more room to move before a significant top. So I always look forward to covering these every few weekends in my updates for subscribers. So that's all for the video. Let me know what you think. Really hope you enjoyed it. And thank you all for tuning in. Leave a comment below, and I'll talk to you guys again on Monday for St. Patrick's Day. Thank you, and hope you have a great weekend.